Good evening, everybody. It's Sterling here at Day Trading Forex Live. Today I'd like to walk you through a strategy I call the stop run reversal strategy. It's a very powerful setup, similar to that of a double bottom or a double top, with the exception of one part. So let's look at that and really get into this, and hopefully you guys can take a part of this and use it in your trading. Anyways, looking at the market here, we set a defined swing high at this point. The market continued to work off those highs. Anybody who's short here most likely putting their stop just above this high. That's a pretty standard case for most traders getting into this market. That is the standard textbook stop placement. So as the market works up to this top, assuming that this will hold, they have their stops just above it. The market makers, the institutions, whoever's pushing the large volume, pushes the stops, pushes the markets up to the stops. When these stops are getting hit, you have people covering their sell positions with buy orders. So these large institutions, these banks, whoever it may be pushing the price up, knows there's going to be a large amount of supply at that area to meet their demand. So once again, going back to the basic fundamentals of the market, supply and demand. If there's a large demand, you need to push the price into an area of large supply. That's the case with what happened here. Now let's look at this situation in inverse. We can see there's a clear double bottom at this point. Obviously no stop run reversal as of right now on this low. That was just simply a test of that level. Looking at this candle, however, anybody long at this point most likely putting their stops below the previous swing lows. Also a double bottom may seem like a good spot to put your stop loss if you're long. As we see here, the market worked through that level, actually went through that level about 15 pips, actually closer to about 13 pips. Definitely enough to be hitting any stops that were below this level for anybody long. So obviously the smart money was looking to get long. They pushed the price into a nice area that is going to have tons and tons of sell orders. Looking at anybody who's long, their stop loss is here, which is a sell order. In addition to that, anybody trading the breakout is going to be selling. And the institution, as soon as we get down to that level, start hitting all those stops, start hitting all those entry orders for playing the breakout, buys all those orders up, the market instantly snaps back. As you can see, waiting for this candle to close would have been a great entry on the buy here. Above this candle's high would have been a solid entry. Ran up at least 2-to-1 risk reward on that, bare minimum. So this is just a great setup. Let's, overlooking why this trade works, let's go over this one more time. When you have large institutions, large banks looking to get in the direction of the market, in order for them not to just instantly drive up the market, if they're going to be going long, the price needs to be in an area where there's a lot of people going short. There has to be a large supply to fill their large demand, or the price just shoots up. They get a worse entry. It makes a lot of sense. They drive it into an area of a lot of supply, meets their large demand, they get in at a great price, the market turns around, anybody who got short on the breakout has to cover, just fuels their position, they're already in, and the market is driven up behind them. Now these strategies will set up a few times a week. Obviously the smaller time frame you use, the more frequently you're going to see these setting up, but it's just a great chart pattern using strictly the price. You're not using any indicators here. You're not using any other form except for what the price is already telling you it's doing. This is a clear indication that smart money is getting into the market. And while we may not be able to move the market like them, we can definitely recognize when they're moving the market and get in with them and catch the trends that they're setting. Well, I hope you guys liked this video. If you'd like to see me do this live, feel free to go to www.daytradingforexlive. Every day we have 2 trading sessions, the European session from 1:30 a.m. to 4 a.m. Eastern, as well as the New York session from 7:30 to 10 a.m. Eastern. So go ahead, go to the website, www.daytradingforexlive, sign up for the free trial, and I'll see you in the room.